Hello everyone, and welcome back to the channel. As we look ahead to 2026, the crypto market is at a fascinating crossroads. It's coming off a period that's been both challenging and incredibly defining. We've seen it all recently: wild volatility, brand new all-time highs, some aggressive profit-taking, and ultimately, clear signs that the market is finally growing up. So, the big question on everyone's mind is, what's next? More specifically, as we head into 2026, which of the two crypto giants, Bitcoin or Ethereum, has the better chance for significant growth? This is a crucial question because the landscape is shifting. The U.S. Federal Reserve has started cutting interest rates, the job market is showing early signs of cooling down, and the money flowing into digital assets has become much more selective. Both Bitcoin and Ethereum are now trading at technically important levels, making this a pivotal moment. The core issue for 2026 really boils down to global liquidity. Will it expand or will it stall out? And if it does expand, how much of that new money will find its way into crypto? That's what we're going to break down today. Let's start with the king, Bitcoin. Looking back, 2025 was a landmark year for BTC. It soared past its previous records to hit a new all-time high of over $126,000. What fueled this incredible run? A huge part of it was sustained institutional demand. We saw large corporations and even some sovereign entities continue to add Bitcoin to their balance sheets, treating it like a reserve asset. At the same time, the spot Bitcoin ETFs were a game changer. They consistently soaked up the available supply on the market, which further cemented Bitcoin's status as a long-term macro asset, a sort of digital gold for the modern era. Now, from a technical perspective, the big picture for Bitcoin still looks very bullish. Even though the price broke out of the ascending channel that guided its impressive climb from March 2024 all the way through November 2025, the underlying structure is strong. After hitting that new peak, Bitcoin pulled back, correcting towards a demand zone around the $80,000 mark. This is a healthy, expected move after such a powerful rally. The main hurdle for another leg up is the resistance area hanging around $110,000. We've also seen trading volume decline, which is a classic sign of a corrective phase, not necessarily a full-blown trend reversal. It suggests the market is taking a breather, consolidating its gains before the next major move. So, what are the possible scenarios for Bitcoin in 2026? Let's explore the bullish case first. If we see a strong, convincing bounce from the demand zone near $75,000, that could be the launchpad for a new long-term push. In this scenario, we could see Bitcoin targeting the $150,000 to $170,000 range. The key confirmation signal would be a decisive breakout above that tough resistance zone between $100,000 and $115,000. If that happens, it would likely be fueled by a fresh wave of interest from both retail investors and the big institutional players. Now, what if things don't take off so quickly? This brings us to the sideways scenario. If the upward momentum stays limited, Bitcoin could spend a large part of 2026 just consolidating, bouncing between $70,000 and $110,000. This wouldn't be a bad thing, necessarily. It would represent a prolonged accumulation phase within the broader market cycle. We'd see choppy price action, some frustrating false breakouts, and a market waiting for clearer signals from the global economy, especially regarding monetary policy. Finally, we have to consider the bearish scenario. What if the price can't hold those key support levels? A loss of the $75,000 to $80,000 demand zone could trigger a deeper correction. In this case, Bitcoin might fall into the $60,000 to $40,000 range. While that sounds scary, this area could act as a rebalancing zone. A drop to these levels wouldn't necessarily destroy Bitcoin's long-term macro structure, but it would certainly test the conviction of holders and delay the next major bull run. Now, let's shift our focus to Ethereum. For ETH, 2025 was also a true turning point. It hit its own new all-time high of $4,955. This was driven by some powerful fundamental developments. Key network upgrades, like Pector and Fusaka, went live, significantly improving the network's scalability and efficiency. This made using the network faster and cheaper, which is crucial for long-term adoption. On top of that, spot Ethereum ETFs started gaining steady traction, bringing in new institutional capital. And all the while, staking participation continued to rise, and activity in the DeFi space remained strong, both of which lock up its supply and support its fundamental value. Looking at the weekly chart, Ethereum is still trading within a broad, long-term ascending channel. This is a good sign. However, after peaking in August 2025, the price pulled back to a relatively weak demand zone around $2,900. While the long-term outlook is still constructive, its momentum has definitely slowed down compared to its earlier explosive growth phases. In the short to medium term, the price structure actually looks more bearish than bullish, suggesting some headwinds ahead. So, let's break down the potential scenarios for Ethereum in 2026. In a bullish outcome, if Ethereum can find its footing and mount a sustainable recovery, it could start targeting new highs. Based on historical cycle extensions, levels like $5,700 or even $6,100 could be in play. The real confirmation of a powerful new uptrend would be a clean breakout above the upper boundary of its long-term channel, which sits around $5,200. A move like that would significantly strengthen Ethereum's position and make it one of the star assets of 2026. Next, the sideways scenario. If demand for ETH remains just moderate, we could see it spend a long time trading in a wide range, perhaps between $4,300 and $2,200. This type of consolidation would reflect a market imbalance, with buyers and sellers in a tug-of-war. In this case, 2026 would be more of a transitional year for Ethereum, a time of building a base rather than breaking out to new highs. And of course, we must consider the bearish possibility. If the price breaks down below the support of its long-term ascending channel, that could open the door for a much deeper correction. The next major support zone would be in the $2,050 to $1,600 area. This zone is critical because it aligns with historical demand levels that have supported the price in the past. A drop to this level would be a major test for Ethereum's long-term structural integrity. So, what's the final verdict for 2026? Is it going to be a year of downturn, or will it be the launchpad for the next great bull market? The truth is, the market is balancing on a very narrow edge. From a structural standpoint, Bitcoin continues to show the most resilience. It has a clear narrative as digital gold and has the deepest institutional buy-in. Ethereum, while fundamentally strong, seems a bit more dependent on specific catalysts like the success of its upgrades and the continued growth of its ecosystem. The potential for a major rally is definitely there, but it's not a given. It requires clear technical confirmations, like breaking key resistance levels, and strong fundamental support, like a favorable macroeconomic environment. But there is one trend that is absolutely undeniable: the crypto market is maturing. Both the rallies and the corrections are becoming more controlled. The crazy, Wild West volatility of the early cycles is gradually declining. The next major bull market will likely depend on a few key factors coming together. We'll need a softer macroeconomic backdrop with expanding liquidity, broader and deeper institutional participation beyond just the early adopters, and greater regulatory clarity from governments around the world. If these conditions align, 2026 might not be remembered as a year of stagnation at all. Instead, it could be seen as the year the market built the foundation for a new wave of historic highs. What do you think? Will Bitcoin or Ethereum perform better in 2026? Let me know your thoughts in the comments below. Thanks so much for watching. If you found this analysis helpful, please give this video a thumbs up and make sure you subscribe so you don't miss our future updates. We'll see you in the next one.